2025 just became the most expensive year in banking history for anti-money laundering violations. Over $6 billion in fines. That's not a typo. Banks worldwide paid a staggering $6.6 billion for failing to stop criminals from washing dirty money through the financial system. So, what went so catastrophically wrong? Let's break it down. Here's the reality: 2025's AML fines have shattered all previous records. Last year, the total was $4.6 billion, already a massive number. But 2025 saw fines jump by nearly 50%. We are talking about penalties that could fund entire national budgets. The three biggest cases alone account for billions. TD Bank's historic $3 billion penalty in October 2024 set the tone for what was coming. OKX crypto exchange got hit with over $500 million in February 2025 for deliberately ignoring AML requirements. And even traditional giants like Barclays faced £39.3 million in fines for letting £46.8 million in suspected criminal proceeds flow through their accounts. First, regulators are casting a wider net. It's no longer just traditional banks under scrutiny. Cryptocurrency exchanges, fintech companies, and even real estate firms are now facing the same severe penalties. OKX's case proves that crypto platforms can't hide behind innovation anymore. They facilitated over $5 billion in suspicious transactions. Second, regulations are evolving faster than ever. International standards from the Financial Action Task Force are continuously raising the bar for what constitutes adequate compliance. What was acceptable 2 years ago is now grounds for massive penalties. Third, there's a zero tolerance policy emerging. Regulators aren't just fining institutions anymore. They're holding senior executives and compliance officers personally responsible. This shift means the buck stops at the top, and leadership teams can no longer claim ignorance. Let's look at TD Bank's catastrophic failure as a case study. US regulators found that TD Bank deliberately prioritized growth and customer experience over compliance for nearly a decade. The result? They were screening less than 1 out of every 10 transactions. That's a 90% blind spot for criminals. The bank's failures enabled three money laundering networks to wash over $670 million in criminal proceeds between 2019 and 2023. Five TD Bank employees even helped open accounts for money launderers. The Department of Justice said TD Bank became an easy target for financial criminals. Barclays' situation was equally damning. Despite multiple red flags and law enforcement activity surrounding their client Stunt & Co., the bank failed to properly monitor high-risk accounts. This allowed £46.8 million in suspected criminal funds to pass through undetected. Across all these cases, three failures stand out. Inadequate due diligence tops the list. Banks weren't properly verifying who their customers really were or where their money came from. Barclays failed to conduct adequate customer due diligence and enhance due diligence on Stunt & Co. throughout a 6-year period. Second, poor risk assessment. TD Bank had millions of high-risk customers but outdated transaction monitoring systems that couldn't handle their rapid growth between 2014 and 2022. They maintained an AML program that looked good on paper but had fundamental, widespread flaws in practice. Third, ignoring red flags. When warning signs appeared, banks either missed them entirely or failed to take appropriate action quickly enough. Deutsche Bank and its US affiliates were fined $186 million specifically for not fixing old AML problems despite repeated warnings. These aren't just financial penalties. TD Bank received an asset cap restricting their growth, plus 3 to 5 years of independent monitoring. OKX faces a 3-year compliance monitor to completely overhaul their systems. Banks are losing their freedom to operate. But here's the bigger picture. When banks fail at AML compliance, they become the infrastructure for organized crime. Drug trafficking, human trafficking, corruption, all of it flows through these weaknesses. The $670 million that moved through TD Bank represented real crimes with real victims. The message from 2025 is crystal clear. Compliance isn't optional, and catching up later isn't a strategy. Banks that prioritized profits over proper controls are now paying billions in consequences. For the rest of the financial industry, this year serves as the most expensive warning ever issued. The question isn't whether regulators will come knocking, it's whether your systems will survive when they do. Now the spotlight turns to you and your institution. Are your AML controls truly built for this new reality, or just good enough to pass an audit? If you'd like a breakdown of where most banks are still exposed and how to close those gaps, drop a comment or hit subscribe so you don't miss the next deep dive.